we have, so we've met Amy already, you've met Valerie already, but the new person here is Jamie Goodfriend. She's the founder of Creative Vision. And I'd like to welcome her to the panel. Jamie, you're been around for a while. You've worked at a lot of different places at WPP. You've been CMO for such companies like Hasbro and Microsoft and Expedia. And so you've been around for a while. I'm really looking forward to having you as part of this panel. And I'd like to maybe throw the first question over to you to give our audience a chance to get to know you a little bit. That's good. That works.
Sounds great.
Okay. So as a former global CMO, what would be some of the metrics that you would be focusing on that you believe that your CEO, CFO would also kind of align on too? Like when you're trying to evaluate marketing investments, what are some of the things that you'd like to focus on and that you found resonated well with them?
It's a great question. And listening to Valerie, I love the dimensionality and specifics that she was going into because it's so critical. It's sort of a larger level. I think one of the challenges that we're kind of addressing today is that the CMO and the CFO don't always speak the same language, but it's not as big of a gap as one might imagine. So I look at anything that helps you evaluate growth, but sustainable growth. And I think that's a big difference because, you might look at short-term performance, but you also want to look at long-term brand value because that's such an incredible investment and asset. So I look at three things typically. I look at CAC and I look at CLV. And
Right.
the question is, are you acquiring customers efficiently? But then are you keeping them and are they staying around? Because churn is so expensive. So that's one thing that, many marketers, depending on the category, of course, but many marketers have some influence over. So you're looking for a conversion and growth in that. And then second, I love to think about the audience because let's not forget, we talked about them as customers, but they're human beings. And so I like to look at them as, are you building a community? Are these people that are going to stick with you? They're going to have word of mouth. They're going to recommend you. And are you doing things that you're going to buy their attention for just a spike? Or are you going to build something so that they keep coming back and they feel like they're part of your world? You've built a brand world that they want to participate in. And then the last thing, I have to always talk about creators because it's kind of the left-handed stepchild, redheaded stepchild of the industry, but maybe not so much anymore with the recent activity and Fernando Fernandez from Unilever, the new CEO, announcing a big move. I think creators are a big area for growth and effectiveness, and I like to look at them as a 360, not just as a media channel, but as a way of getting everything from really in tune insights and research as a resource to building your production capabilities and being able to deliver video at scale. So those are sort of the big three areas. But bottom line is that it's not just the ability to figure out what happened and did it work, but why and how you can optimize for the future. That's how I look at it. It's kind of a long answer, but that's how I look at it.
No, it's totally fair. I mean, we default to these things like CAC and CLV as common metrics within the industry. The challenge sometimes is like, do CFOs really understand what that is? And if you're looking at saying, well, look, I want to invest in the CDP because we need to have better control over our audiences because we're determining is that certain audiences really do have a better CLV. So I need this investment over here because that will lower my CAC. It's the linkages of those things, I guess, which I'm concerned about is do they see those and how do we communicate those more succinctly so that they understand, well, look, the internal rate of return of doing this, of investing whatever it is to implement that MarTech component, we see that coming back to us both in a lower CAC and a higher CLV. And has that ever been kind of part of the conversation that you've had?
The most effective conversations, yes, because especially if you're trying to convince the CFO in areas that may not be typical, especially if you're a newer CMO coming into a new organization, one of the things that I found to be the most helpful is having a very detailed conversation with both the CFO and the CEO and bringing them along for the journey, as opposed to just trying to launch something on them that they don't have the context for. And that
Right.
could be showing them the campaign, but also tying it back to business outcomes. I think one
Right.
of the challenges for many marketers is they don't speak CFO,
Right.
and it's not necessarily a natural language. I can say it was not a natural language for me, but I've learned. And that's where it becomes much more of a shared investment and a shared ambition.
Yeah.
Is that kind of shared language, which is key.
Yeah, no, absolutely. Amy, I want to ask you, in a world of performance-driven marketing, right? Where do you feel, and we just heard Paul talk and you started off, but where do you feel that brand equity it fits into this equation with respect to sustainable, profitable growth?
Yeah, it's a tough question, and it's often seen as the two ends of a spectrum, right? Performance over here, and short term and immediate results, and then this ethereal thing, brand equity over here, which none of us really know how to put our hands around. And the reality is that, two critical things in that: brand equity amplifies performance outcomes, number
Right.
one. And it's our job as marketers to make sure that the business really understands that. Strong brand equity reduces your reliance on short-term investment efforts. It increases organic demand, it increases and improves conversion rates, and it increases lifetime value, just as Jamie was saying, that stickiness of your brand. So well-established brands that do balance those two things, they make every marketing dollar work harder by doing both of those things. And it's not a performance dollar or a brand dollar, it's a marketing dollar.
Right.
And they're all working to the same thing. And I think it's one of the things that we've struggled with as an industry is how to quantify that and explain it to CEO, CFO that, yes, the time scale of a brand dollar may be longer, but the outcome is ultimately still the same. And I think the other side of it is that long-term brand investment also protects against diminishing returns as well. So, we see this a lot. We hear of this, especially in the US market, of brands that have overinvested in short-term performance thinking. That taps out at some point. There is a diminishing return on that. You can't keep fishing in the same pool over and over again without doing anything to expand it. And so when we think about sustainable, profitable growth, brand equity just goes hand in hand, because you can't harvest demand if you're not generating it in the same breath. And that's the thing to solve, and make sure that as a marketing team with the rest of the business, you have the language, most importantly, to translate that and make sure that everybody is on the same page with what you're investing in and where you're putting your dollars.
Yeah, I want to turn over to Valerie or Jamie if you had anything you want to add to that.
Valerie, you go first, but I have a story. So
I love stories.
I kind of want to hear your story, Jamie.
Yeah.
True story. I took a CFO for one of my roles to Costco one time, and I showed him Costco batteries and Duracell batteries. And Duracell batteries are $6 at the time, and Costco batteries were like $2. They're the same battery. It's the exact same battery, but the Duracell batteries they were able to charge $4 more because of the Duracell brand. That's all I had to show him. It was like, this is what brand equity does for you. I didn't even get into the inoculation when there's a trauma or a crisis, and that people will step up and help you. But that's a legit way of simplifying it for a CFO, and you can't deny that. So I like to simplify things. And we got
that does put a very, very clear point on it. Valerie, did you want to add anything?
Yeah, I think it kind of definitely brings up kind of my past experience at Nike, a behemoth of a company that definitely prides itself on brand equity. And I think the way that we approach that within the media team, at least, we saw it as a huge lever for a lot of tactics that actually we saw a significant amount of ROAS come through, as well as first-time buyer metrics. And so it's definitely not something that you can discount as part of a holistic strategy. And so that's kind of what came to mind when you were speaking, Amy.
Yeah, one of the ways that we articulate it is quick to mind and easy to find, right? So the brand building is all about the quick to mind, but that only really works well if you're then easy to find. So these two things have this, this interplay, which is ongoing, and you diminish one at the expense of the other. It's just the way that it is. So. Valerie, I'm going to turn over another question to you. Acquisition marketing plays a major role in business growth, but there's always kind of this balance between scaling fast, and you talked, going away and then coming back, and Turo was a different company, and maintaining efficiency. This balance between scale and efficiency. What are the struggles that have been, that have been most effective for you, or what strategies, I should say, have been most effective for you in achieving this kind of sustainable, profitable customer growth, right? So that kind of quarter over quarter growth that CFOs and CEOs love.
Yeah, I think we're in the thick of it right now, if I'm being honest with you. And so that's why I mentioned Incubeta has honestly been so critical in that, because it is a step forward for us to kind of prove that out, especially with diversifying our media mix, which I know Turo historically has been a bit uncomfortable with, just knowing our past with growth at all costs. And then it was back to profitability, taking these big swings. But I think what I'm bringing to the table with Incubeta as partners is the importance of that mid funnel and that upper funnel to work holistically together. And so it's really just about diversifying our media mix beyond higher intent channels like Google, Apple search, and our OTA channels that we partner with, like a Kayak or Expedia, but leaning into things like paid social and display that might make last click attribution look a little bit terrible and make the company a bit more uncomfortable, but having that kind of regular testing on our side to ensure that we're seeing those results. And just as a preview, in the last MMM readout that we got, we actually had that validation, which was great to see. And so I think going on that track, making sure that we're talking to the execs about it and having them go on their journey with us and understanding the importance of it will be critical in making sure that we can actually be really effective in achieving sustainable, profitable growth.
Well, the fact that you saw that already in the MMM is fantastic. Incrementality testing is, it has its issues, but it's also super powerful as well, and really, drives a point home that links between lower and upper. So I get that you're doing that. Amy, question for you. Are you seeing, in the work that you've been doing and talks with your clients, a renewed focus on brand building with a long-term outlook? So, moving away from the addiction of that, that lower funnel action, right? Performance marketing, which is, still strong, but what's your read on that?
Yeah, the quick hits. Yeah. Definitely the interest to do it and lots of conversations about it. And I think to pick up on Valerie's point, the testing is the way to do it. And that's a lot of the conversation that we're having with, nobody jumps from, 80+% of their media and investment in lower funnel, immediate return to then building a massive brand campaign and investing, 6 times the budget. Nobody does that. You do that on a scale of testing and proving out things that work well incrementally to what you're doing. So it's definitely, I wouldn't say it's a shift in conversation. I think it's always been there. I think there's much more of a role that we're playing as Incubeta with our clients as that organizational design and almost change management agent with them, because it's a shift culturally in the way of working, in the way of measuring success, and you need all parties aligned to that. So I think everybody is, whether they've read the text, the effectiveness studies, or you subscribe to those things or not, everyone knows what they should be doing, and a more balanced, holistic, full funnel approach is the right approach. But where brands need help, and our clients especially, is just on making that happen internally, making sure that everybody's on the same level of expectation of what that means, and the timescales of it and how we'll test it. And I think, working with someone like Valerie, it's what quick things can we do to prove this out, and then we can do more. That's a lot of the question, and that we're working with our clients.
Yeah. What are the rapid results that we can demonstrate that show that this is something we should be on the right path? Yeah, on the right path. Exactly. That level of confidence. Yeah, and I just want to let everybody know who's listening that if you have a question that you'd like me to ask the panel, please just put that into the chat and I'll be very happy to do so. And I want to shift to a question for you, Jamie. At Creator Vision, you've worked with multiple brands to help them maximize their investments in creator marketing. And since you told us a story earlier on that kind of is still in our brains, maybe you can share another success story that you've had with Creator Vision and kind of what some of the common factors are that you see in those campaigns that yield the best outcomes, best profitability.
I love what Amy was talking about, change management, because had I known now I wish I had studied change management or org psychology back in the day. I don't even know as you said, I've been around for a while, Alex. I'm not even sure that was an option back then, but the biggest challenge to most marketers and marketing organizations that they were originally and are still set up to do essentially 30-second ads. Then they added in e-commerce and social, but most organizations still are not 100% set up to be in this real-time, always on dynamic, optimization kind of a world. So one of the opportunities that I had, and I can't say the company name, but it's a very large company. One of the things that I found was most companies are set up vertically, excuse me. Most companies are set up vertically in silos, but consumers go through horizontally. And it doesn't reflect the way the audience, I always go back to the audience. And so here's an example. And funny enough, working with creators is often like having canaries in the coal mine. One client had, I was working simultaneously, coincidentally, with the digital team, the e-commerce team who had just launched an app for two different brands. It was a house of brands. The marketing team for both of those brands were doing creator programs. And the creators were being compensated, some of them based on their ability to drive conversions, which is a pretty standard deal point now. Unfortunately, the creator marketing team and the digital e-commerce team were not talking to each other. So the plumbing wasn't connected. And the marketing was driving upper funnel demand, and the digital team had launched apps to capture and deliver on conversion, and they were not talking to each other. And it was just as simple as taking a step back and kind of having a holistic view of the organization and being able to connect the dots. And that was really eye-opening because it wasn't set up that way. So there was no best practices and there was no orchestration in that way. And I think part of what we're seeing in this brave new world of marketing is you have to have the marketing and organic side of the house talk to paid. Right. Another big area that I'll point out, and I'm curious if Valerie especially is seeing this, but a lot of companies are spending money on their organic marketing, organic creator programs, and they don't talk to the paid team. So one of the most, and probably the only way that you can really accurately or appropriately take advantage of creator marketing is to boost with paid media. But it's kind of a clumsy system because there's no platforms really that connect the dots. So it's real time, and it's almost like you want it to be like a commodities market so that you can wheel and deal. If you see a post is going well, you can fuel it with paid, or where to direct that paid, or what audience it is. So these are some of the structural things that I get the great privilege of being early to figure out and try to help clients do that. And when they do connect all the dots, you do see on average about a 20% immediate incremental growth from your investments. So that's one of the big things that I see on a frequent basis.
Yeah. So
she knows. She's living it.
Yeah. And you touched on this aspect about change management, and so much of, the organization's vertical or horizontal. It doesn't really matter. Getting things done within the organization and shifting is an exercise in bringing people along. So I guess that sets up my next question. I'll toss it out to maybe start with Jamie, but to all of you. And that is, in the function of a CMO, right? How can you set those expectations for your CEO or your CFO or anybody in the organization about the outcomes that you're going to get from these marketing investments that you're making? So, it's kind of being able to put a mark on the table about what you expect and hope to get from it. But how do you set those expectations?
This is the bazillion dollar question. I think the best organizations and the best situations that I've ever been in is where the CEO says, this is your portfolio. You agree on the deliverables, and then you manage your portfolio of levers, whatever that is, based on how you believe, since I was the expert in marketing, and how you achieve those goals. And it's not micromanaged. That's a
Right.
rare situation. I've had that a few times, and that was the best opportunity, because then you feel an ownership. When you have a dynamic where you have short-term public company mandates, you've got to, deliver quarterly results because of a stock price issue, investor issues, setting expectations, you tend to set them lower and hope to exceed expectations. And that is the game that most people play.
Yeah.
The best CEOs really understand the steps that are required and some of the factors that are going into your ability. Because sometimes it's not the marketing team. It could be product is delayed. It could be that, that there's a geo crisis. There's so many factors. And I think CMOs, marketing needs better marketing. CMOs often don't have the control to pull the levers, yet they're responsible for it. And I'm not saying, don't cry for me, Argentina kind of thing, but I think having a CEO and a CFO who are in lockstep and speak the same language, going back to my earlier point,
Yeah.
That's the best situation. But setting expectations is a really tricky. It's like it depends. Every opportunity is different. Every CEO is different. Every CFO is different.
Yeah. Jamie or Amy, would you like to add anything to that?
Yeah, I mean, and to add from my perspective and looking at it from not the CMO lens, but in supporting CMOs in our role, I think I want to, from your question, Alex, of you use the term reasonable expectations,
Yeah.
which I think is important, right? And to Jamie's point, having the autonomy and the discipline of marketing to be able to do that and pull the right levers is the ideal. I think I would agree. I mean, I think that the first step is that alignment. Before you do anything else, is what does success look like, and what are we all working towards? And
Right.
then you can manage sort of behind the scenes as much as you can in your control. A lot of the work that we do, and as I said, this is kind of a pivot for us as an agency working with clients, is that leaning into the change management and the process of, we've bolstered our project management team for that exact reason, that, client, they need help with the roadmap. So I think post setting those expectations and alignment on that, then it's managing the time horizon for those outcomes very clearly of what's going to happen when.
Mm-hmm.
So many, we're on the, challenging somewhat economy at the moment. There's only finite resources to play with. You don't want to take your foot off the gas of things that are working, but you need to diversify. Managing all of that carefully with very clear testing frameworks, KPIs around it, so that whether it's working or not quickly is absolutely critical. And I think equipping the marketing team with that is fundamental. And then beyond that, I think the final element is really the cost of inaction is a big topic that we talk about with our clients as well, which is often, we're asked to prove, well, what will this do? If what is this going to, and it's the bigger question is, what will happen if we don't do this? Because that is often a much scarier path, that in action and not making this change or testing this out now, and leaving revenue growth, profitability on the table is hugely detrimental. And if you don't move, you're always going to be behind. You're always then in catch-up mode. And so I think helping marketing team to really understand that the value of inaction and quantifying that in a language that they can talk to internal stakeholders is really key and critical as well.
That hesitation, I'm sorry to jump in, but I think that's such a key point, because if you don't get in, you can fail, you can have experiments and you can learn and gain that valuable information, because if you don't, your competitors most likely will. And you're not going to get that knowledge, and it gets more expensive to get that knowledge. And that lack of action, the hesitation, is really costing people. I see that all the time. So it's such a good point, Amy.
Yeah. And the speed at which you can test now, and do something, learn and move has never been faster, right? With what we've got at our disposal. So I think, yeah, Jamie, to your point, then a great one of getting to a point where you're like, oh, our competitors are doing this and it's working. And then trying to spend the time to, well, let's figure out what they didn't know. Like, that's not where your time should be. Your time should be like, you just go do stuff, like go test, figure out where you are today. What can we learn in the next month? And keep moving forward is the only approach.
Yeah, I want to hear from Valerie on this, but I'll just interject to say that, the Harvard Business School did a study on the cost of disinvestment, looking at the recession of 2008 and up until about 2000, I think it was 17, looking at the Fortune, I think 500 companies who went into that recession and said, okay, we're just going to batten down all the hatches and we're going to pull back from our marketing, versus those that continue to invest, not just in the marketing function, but the innovation function, the growth function. And the 10-year delta in share price was 17% CAGR, right? So the idea that the cost of that disinvestment was actually very, very significant, right? So, but Jamie, I would love to give you an opportunity to answer that question too. Sorry, Valerie, excuse me, Valerie.
Yeah. No worries. Yeah, I think just to add to that too, I think companies, at least in my experience, can get really stuck on previous learnings, right? So you can test, but I think there's also an importance of retesting with maybe a different messaging, maybe tackling it at a different stage in your business versus like getting stuck on previous learnings and saying, okay, that's it, doesn't work for us, let's not invest in it. Because I think there's a danger in that too, but raised excellent points here.
Yeah. Well, we're rounding out to the end, so I'm just going to give the lightning round for everybody to just answer this one question. If you had to give one key insight to our listeners, or one lesson that you feel that as a marketing leader that you'd want others to walk away with, what would it be? So I'll give you a second, unless somebody wants to just jump in because they know what that one thing is, or one of the key things.
I'll go.
Sure. Thank you, Jamie.
I'll be brave.
Yeah.
I can't emphasize enough, know your audience. And I think the more entrenched in the C-suite you get, the less you know your audience. And you read about them on forums and reports. You got to go be with your people. You got to see how they're living. You've got to see how they're buying, what their problems are, and what solutions your company, your brand, your product can provide. And I usually say, know your audience, speak their language, and understand their world. But my one thing is know your audience.
Yeah. Thank you. Appreciate that, Jamie. Valerie?
I would say take big risks. Like, I think that we can be so comfortable in kind of doing the same old and knowing what works and sticking to that. But then you run the risk of not growing. And so if you don't take big risks and test new things, I think you can silo yourself at the cost of not growing your business. And so that's my one big takeaway, but I love Jamie's as well. I think know your audience is super important, and knowing where they hang out and knowing that they are in fact like horizontal, right? Like, as a consumer myself, I could see an Instagram ad, save it for later in my head, but then watch it on TV and be like, oh, I remembered that, let me type it in. And so like that, those are things that we kind of forget when we're so in the weeds on day to day. But
yeah. Perfect. And Amy, last word.
Yeah, Jamie, you came out with the big guns early. That is the critical one, right? With audiences. I always remember being told, like, the minute you work at a brand, you're no longer the consumer. You have no idea how they operate. Like, you are already biased. So I think that really is the key one. Just building on what we've already said, for me, I think the key takeaway, I mean, chasing short-term wins without building your brand is just a race to the bottom. So whatever you can do today, tomorrow, to start testing, diversifying your mix and thinking about building brand is the only way you're going to sustain growth. And second to that, the audience piece of it. I think if you follow not what you think your consumers want, you as a brand, but if you really, invest in understanding them and following that with your activities in marketing, you won't go far wrong from what actually, how they operate. To your story about Duracell, Jamie, I mean, even if on the packet it says equal battery life, it doesn't matter at that point. You've got so much, awareness of what Duracell means and its power. Right. It's irrelevant. So that is the critical piece to land.
Yeah. Well, thank you all. We're wrapping up now, so I'll just start off by saying I appreciate the contributions of all three of you and Paul as well to this. This is really interesting. A couple of takeaways on this for me are that outperformance really requires that full funnel investment as well as a measurement strategy, and that has to be both on platform and cross platform, including incrementality and MMM, and it's a kind of a core part. The other one is that, this is always within the kind of, let's say, the blanket of change management, right? So we want to make sure that we understand what the drivers are and what matters to our stakeholders within the company, and bring them along on the journey, particularly if we're more focused on performance marketing as opposed to upper funnel or vice versa. Another thing that feels is like, the more things change, the more they stay the same. As Amy started off with, the importance of creative and the levers that we have as marketers to pull. They're kind of, there's new ways that you can pull them, and maybe the levers have changed a bit, but fundamentally, when it comes to profitability, still creative and the old things still matter a lot. And you could even say that MMM is an old measurement mechanism that's come back in this current day and age. So there's a lot of things that we need to take into account if we're really going to look at profitability with respect to our marketing. In all of this, just a little comment to our listeners is that, trying to understand what the sequence is for us to kind of tackle the systems in the organization. That's what the marketing profitability assessment that Amy referred to earlier on is all about. It looks across the organization from a maturity level, but across various functions of the organization, and tries to help you understand, of these, which one do you need to invest in first that will deliver the greatest impact, and then try to quantify exactly what that impact would be. So I encourage you to take a look at that, and that's definitely going to be in the links that will follow with this. So I want to wrap this up and share with you the other news that we have is that you can scan the QR code here. And if you do, you'll get access to our white paper, which looks really specifically at this question of profitability in marketing, and tries to share with you what that roadmap might look like, depending on what your outcome might be from the marketing profitability assessment. I encourage you to read it. It's a practical how-to guide, and I think you'll find it really enjoyable. So we'd appreciate continuing this conversation. If there's anything in today's session that you want to double click on, or you'd like additional answers, or you have questions on the roadmap, please, there'll be a link in the post where it's right there, and you can share your feedback with us and let us know, and we'll try and get those questions answered.